Good morning, good afternoon, good evening, good people. Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks. When you open a new Moomoo brokerage account, they're going to give you 15 free stocks for just trying out their brokerage app. When you put $100 in your new brokerage account, they're going to give you 5 free stocks. When you put $1,000 in your new brokerage account, they're going to give you 15 free stocks. There's a link down in the description box of this video. Go click on that Moomoo link. Open up your new Moomoo account today. Go get that free stock. Go get that free money. For those of you who have wished me a happy birthday, thank you. Today is my birthday, February 29th. That's a leap year. So I get a real birthday every 4 years. And I'm 56 years old, guys. I am 56 years old, and I want to say thank God for allowing me to grace this earth for 56 years. And I appreciate you guys who've been rocking with me for these last 4 years. Remember, we started this journey on January 2020. Right? That would have been the last time I had a real birthday, which would have been February 29th, 2020. So 4 years later, we've grown our community to almost 700,000 subscribers. Nobody can tell me God ain't in control. So appreciate y'all, man. Appreciate y'all, appreciate y'all, appreciate y'all. And we got a lot to unpack today. We're going to talk about what if everyone is wrong about inflation? What if the Federal Reserve on March 20th, when they meet, what if they decide they're not going to decrease short-term interest rates, but instead increase short-term interest rates? What would that do to our financial landscape if they decided to increase short-term interest rates to fight inflation? Now, some of you might say, well, Richard, I'm not sure why they would increase. Inflation is going down. You would be correct. But if you looked at the last CPI inflation report, if you looked at the last PPI inflation report, you will notice inflation did not meet expectations. For example, if we look at the CPI report for January 2020 that we got in February, expectation year over year that inflation would go up year over year by 2.9%. It actually went up by 3.1%. So we missed expectations. If we look at month over month, most economists were looking for month over month 0.2%. It actually went up 0.3%. So on both of those inflationary indicators, headline inflation indicators, we missed. That's not good, guys. It's not bad, but it's not good. We missed. If we look at core inflation from January. Most economists wanted year over year to come in at 3.7%, but we came in at 3.9%. Month over month, economists wanted us to come in at 0.3%. We came in at 0.4%. So all I'm telling you here, guys, is the Fed is concerned. You got to understand, they want inflation at 2%. And right now, we're not there. And they've been fighting this thing almost 2 years. March 2024 will be 2 years since they started increasing rates to fight inflation. It's been a 24-month battle, and they still don't have inflation at 2%. So you tell me, what are they thinking to themselves behind closed doors? I can tell you what I believe they're thinking. They're saying to themselves, interest rates are going to stay up higher for longer. We're not going to decrease short-term interest rates in March 20th meeting. We can't. We've been at this for 2 years and we still don't have inflation under 2%. So I think the Fed can make the case to increase interest rates if they wanted to. Now, do I believe that's going to happen? No. But they can make the case based on the data. Now, they'll be getting a February CPI inflation report. They'll be getting a February PPI inflation report. They'll also be getting a jobs report. So they're going to have that data for February before their March 20th meeting. So that could tilt the scale either for a decrease, it could tilt the scale either towards an increase, or they can just stay neutral and do nothing. Now, what I will tell you, the stock market has already priced in that the Fed will cut rates this year. Matter of fact, they've priced in 3 cuts. That's the reason why you see the stock market doing so well. That's why you see the Dow almost at 40,000 points. That's why you've seen the S&P over 5,000 points. That's why you've seen the NASDAQ in that 15, 16,000 point range, right? Because of this optimism that the market has, because they believe the Fed is going to cut rates. So therefore, you got more activity happening in the stock market. But if you looked at what was happening this morning with Treasury bonds, U.S. Treasury bonds, if you looked at the 10-year U.S. Treasury bond rate, it started going up this morning. There was some data that came out, PCE data that came out that we missed. We missed on the PCE measurables. So what happens when you miss like that? The stock market tails off, the bond market goes up. And I'm talking about the U.S. Treasury bond market. If you look at what's happening with the 10-year U.S. Treasury bond right now, look at the 2-year Treasury bond. I think the 2-year Treasury bond is in that 4.6, 4.7% range. So all that means is you could take a U.S. Treasury bond out for 2 years, and today you could probably lock in a rate for 4.6% for 2 years. That will hurt the stock market. I keep telling you guys, when the bond market is up like that, the stock market got to go down. Because why? They're competing for the same investor. They're competing for the same investor. And anytime bonds go up, interest rate goes up, it makes it more attractive. Why? Because it's basically guaranteed money. The only way you don't get paid back is the U.S. government completely fails, which that's not going to happen anytime soon. So it's easy for someone as an investor in the stock market to say, you know something? Yeah, this market is kind of wobbly right now. Let me take my couple $100,000 and let me go put it in a 4.6% guaranteed rate of return for 2 years. I'll see y'all in 2 years. That's what happens. That's why when you see the bond market goes up, U.S. Treasury bonds go up. I'm talking about new issues of new U.S. Treasury bonds. When they go up, the stock market goes down. Why did the stock market start off that way today? Because of the PCE inflation information that came out that we missed on some measurables. So what's going to happen? We'll have to wait and see on March 20th what the Fed decides to do. But like I said, you better protect yourself. You better protect your money. Let me ask you this. Who benefits when inflation goes up? Who benefits the most? I want somebody to tell me who benefits the most when inflation goes up, when the prices of our goods and services go up. Who benefits the most? Bingo! There you go. See, you guys are catching on, man. You guys are pretty dang on sharp. I got some pretty sharp, pretty smart people on my YouTube channel that subscribe and watch these videos. You're absolutely right. The 1%. That's who benefits. Let's go back to 2022. Who do you think benefited most of all the chaos that happened in 2022 with our financial markets, with the Fed just drastically increasing short-term interest rates, the stock market falling? Who benefited most? The 1%. How do I know they benefited? Look what they did in 2023. Look what they did in the first couple of months of 2024. They cashed out billions and billions and billions of dollars worth of profit. What do you think they made that profit? What year did they make that profit in? 2022. When inflation was at its all-time high, 9%. Inflation was at 9%, guys, in June of 2022. The Fed had started ratcheting up interest rates in March of 2022. The market started tanking. Stock market. But who benefited? Who made out like a fat rat? The 1%. Who did not really build any wealth? A lot of the 99%. Why? Because we got scared and afraid. See, when things started tumbling in 2022, we got scared and afraid. We were listening to the propaganda machine, which is the mainstream media, and the mainstream media was telling us, guys, the sky is falling in. Everything that you have left in the stock market, take it out. Move it to safety. So people were just taking positions out of the market that they had lost value on their position. They took it out anyways because they thought they were going to go to zero. So what happens? 1% swoops in and does what? They start bottom feeding, buying up all of these really great companies, these really great ETFs, these really great index funds at a discount. They did that for all of 2022. You could have bought NVIDIA under $200 a share. You could have bought Meta under $100 a share. I think Apple was down in the 140 range. Vanguard Information Technology was down in the 303. Matter of fact, I think Vanguard, VTG got down to like 304 a share. VOO, I believe, was under $300 a share. It was in the 290 range. My point is this, guys. If the Fed increases short-term interest rates, the 1% typically benefit. If the Fed decreases short-term interest rates, the 1% benefit. They benefit both ways. Why? Because they're in a position with their wealth to be able to take advantage of good times and bad times. And that's where we got to transition to. But the only way we're able to transition where we can build wealth in both good and bad times is we got to change our mindset, right? See, here's the 1%'s mindset in bad times. Let's scare them to death. Let's make them sell all of their positions. Let's crash the stock market, and then we're going to go in and bottom feed and buy all of these. We're going to buy the dip. We're going to buy the dip. And then guess what we're going to do? We're then going to signal that the bad times are over. Now we're back in good times. Then they're going to start the propaganda machine to force you back out buying stuff. That's what happened in 23, right? We kept buying stuff, right? All this stuff we kept buying in 2023. Guess what it does? Runs the stock market back up. Why? GDP 3%. Why? 1% wanted to do what? They wanted to make profit on all of those assets they bought in 2022 in the bad market, or the so-called bad market. It wasn't a real bad market. It was a market to make money, but they don't want you to know it was a market to make money. But they made a lot of money in 2022 in this quote unquote bad market, bad times. Well, all of us thought it was bad times because that's what they told us. And we listened to them. We listened to the propaganda machine, the mainstream media. And then these guys turn around in 23 and tell us, guys, we're great. We're in a great market right now. Everything's great. Keep buying. Keep on buying. Look what's going on in the job market. You guys got 2 jobs for every 1 candidate. You got 4% increase in wages. Go ahead, keep buying. It'll be okay. And then all of a sudden, what do? They start selling off in January and February of 2024, all of those assets they bought in 2022 that you dumped prematurely. They started buying them up in 22 and they sold them in 24. That's why you're seeing all these people running around here talking about these billionaires selling all their stock. It's a historical pump and dump. A historical pump and dump. That could happen in 24. I'm not saying it will, but it could, right? It could be a repeat of 2022 if we're not careful. Now, how do we protect ourselves from that? We don't listen to the mainstream media. We understand their tactics. We understand these companies, or especially if we're investing in good companies, they're going to be here tomorrow. Right now, we should be dollar cost averaging in. Even though the stock market is at all-time highs, we still should be dollar cost averaging in because we don't know. Remember, guys, we're not trying to be experts here and try to time the market. We don't have the inside information that the 1% has. See, they can do that because they have insider information. Remember, we talked a few days ago about these politicians who have insider information when they serve on these budget committees, they serve on these finance committees. They know what's going to happen before it happens. And they use that to their advantage to manipulate the stock market, to manipulate their position in the stock market. See, we don't have that intel. They do. So our best way to compete and build our wealth is we got to be in the market every single day through dollar cost averaging. We got to be in there every single day through dollar cost averaging. So if we do hit a bad time, guess what? We will continue dollar cost averaging, but we'll buy our favorite companies and our favorite ETFs and index funds at a discount, just like the 1% did in 22. Just like they did in 22. They just bought them at a discount and held them. Remember, I always talk about you buy them and you hold them. The goal is to do what? Buy low, sell high. So what we have to do in bad times, we got to continue buying. We cannot abandon our position in the market. We have to continue buying through dollar cost averaging. In good times, if we have not gotten to our enjoyment stage of wealth, we keep buying, even in good times. See, even in good times we buy, even in bad times we buy. Once we get to a point where we've reached our destination, we've gotten to our pot of gold at the end of the rainbow, then we sell. And then we transition that wealth into something that will pay us income. But when we're in the building stage of wealth, we gotta be in the market 365 days per year. We have to. Remember last week when NVIDIA came out with their fourth quarter earnings report. Remember how the stock market just went crazy for that day or so, that day or two? You just missed probably two of the best days of 2024 in the stock market. Why? Because you're sitting on the sideline waiting. Don't sit on the sideline and wait. You got to be in the market 365 days a year, because we don't know when those top 15 or 20 days when the market just goes to the moon, we need to be on the rocket ship. But if our money is not invested 365 days a year, we won't be on the rocket ship. We're going to miss. Last week, some of us missed the two best days of the year. We missed them because we're on the sideline. Guess who didn't miss though? 1%. They didn't miss. They were invested. We got to be invested. Because if we're wrong, if everybody is wrong, guys, about inflation, we can't look at it as an opportunity to be scared and go run and hide. We got to look at it as an opportunity to build wealth. We do. I'm always ready, guys. Good times, bad times. I'm in the market 365 days a year until I get to what? My pot of gold at the end of the rainbow, till I get to my freedom. Good times and bad times. If you go back onto my channel, you'll see I've made several videos about how to invest in good and bad times. How do you do that? You just stay invested 365 days a year. I don't care what happens. I don't care what happens. I don't care. I'm gonna stay invested 365 days a year. So I don't miss no days. I don't miss any growth. If the market tanks, guess what? I buy the dip. Because I know, what does history tell me? It's going back up. 1929, right? Depression. Oh, it'll never be the same. We'll never recover. We recovered. A lot of people made millions and billions, right? 2000.com bubble. We'll never recover. We recovered. People made millions and billions. 2008 great financial crisis. We'll never recover. The stock market will never be the same. It did. It recovered. And people made millions and billions. 2020, pandemic breakout for two months, March and April. Market loses 35% of its value. It'll never come back. Guess what? It came back 57 days later at all-time highs. Here's a pattern, guys. This is what the 1% don't want you to know. It always comes back, guys. It does. That's why I keep telling y'all, be invested 365 days a year. I don't care what the Fed does. See, I don't worry about what the Fed does on March 20th. See, a lot of people own pins and needles and panicked and I don't care. If they raise interest rates, I still get rich. If they lower interest rates, I still get rich. Doesn't matter. I don't care what they do. I'm gonna get rich either way. I'm gonna get rich, why? Because all the investments I have in the market now, if they decrease interest rates, guess what the market's gonna do? It's going to the moon. So everything I got in the market right now, 75% of my net worth that's in the market right now, it goes to the moon. I'm rich. If it goes down, guess what I do with the current money that I have? I buy lower. I ride the dip. And then in 2 years, it'll go back up. I still get rich. Either way, I get rich. Either way, I get to freedom. This is why I keep telling y'all. Either way, you get to freedom. The only way you lose is if you sit on the sideline. It's the only way you lose, man. Only way you lose is if you sit on the sideline, or if you are invested, you lose your patience. See, they count on you guys to lose your patience. See, what they do is here's their tactic. The tactic of the 1% is to do this to people like you and I. When times are good, they want you and I to buy. That's when they want us to buy. When things are going up. They want you and I to buy. That's when they want us to buy. Soon as things turn the other way, all of this stuff we bought as it was going up, instead of us to just hold it and keep buying as the dip, we buy the dip, they trick us. You're gonna lose everything, Richard. Sell it all, sell it right now. And all that is I lose my patience. Had I just stayed in, had I just kept buying, 2023 would have came around, I would have made a bunch of money. But yet and still, instead of me keep buying through 2022 when things were looking bad, instead of me keep buying, stay in the market, keep my patience, keep buying, I know it's coming. How do I know it's coming? Because history tells me it's coming. I know it's coming. Just keep your patience. Don't lose your patience. 23 rolls around, boom, I'm rich. But a lot of us in 22, we lost our patience. Right? We fell back into the 1% trap. We started listening to the propaganda machine. Sell now. You're going to lose it all. Sell it now. Save yourself. We won't recover from this. Not even a year later, we done recovered and went to the moon. They got rich. You got poor. I'm just telling you guys, that's where we are. I keep telling you, it doesn't matter. It doesn't matter what the Fed do with interest rates. Ultimately, the Fed is controlled by the 1%. They are. Why do you think these people prosper, guys, when inflation is low and when inflation is high? Why does the 1% prosper in either one of those situations? Because they know being invested through this whole period is the way you got to be. Now, don't get me wrong. If you've gotten to your nest egg number and you're tired of the game and you're ready to tap out, you're ready to get out the game. Coach, take me out the game. I done hit 40 points. I'm good. Let somebody else play. I'm good. Tap me out. Get me out of the game. I get it. You done built your wealth and now you're ready to protect your wealth. You go into preservation mode. Yes, I don't blame you. Take your money out of there and put it in something that's going to give you a guaranteed rate of return and protect your principal. I ain't mad at you. But for y'all out here who ain't built no wealth, you are not in the enjoyment stage of wealth. You're barely in the building stage of wealth. I'm not sure why you wouldn't be in the market 365 days a year. I don't know why you wouldn't be. Personally, I'm in there 365 days a year. I don't care if it's raining, snowing, sunshine. I don't care. I'm in there 365 days a year like clockwork. Why? Because in these next 10 years, I need to double my net worth. And the only way I know how to do that is through investments. Yep. Stock market, paper assets, real estate for income, and businesses. Those are only 3 ways I know how to double my net worth. How you going to double your net worth? What are you going to do to double your net worth? You're going to sit around here and listen to the 1%, the propaganda machine, some dude on CNN, some lady on MSNBC, somebody on Fox Business. You're going to listen to those people? Come on, man. Do you really think those people are telling you what they really feel? They're not. Why? Because they got a big old contract that says they work for that network and they can't go on there and just say whatever they want to say. They're going to say what that network tells them to say. All I'm telling you, man, is you better figure out what's important to you. Don't worry about the Fed. The Fed going to do what the Fed going to do. I don't care what they do. I watch and pay attention because it helps me build wealth. That's the only reason I watch and pay attention. It's because it helps me build wealth. It helps me know exactly what the 1% getting ready to do. That's why I knew in 2022 when the market started crashing and I kept telling y'all, get yourself invested, man. Sign up, get yourself invested. I kept telling y'all that all 2022. Some of y'all listened. And the reason I know some of y'all listened because you emailed me and said, man, I'm killing it. One guy emailed me, he DM'd me and said, man, NVIDIA is going through the roof, and I'm heavily invested in NVIDIA. Thank you, man, for mentioning that in 2022. Thank you for mentioning it in 2023. Keep trying to tell you guys, man. I'm no expert. I just follow the 1%. I told y'all I copy the 1%'s plan. That's all I do. I'm no expert here. There's a lot of people on YouTube that knows more about the analytical parts of the stock market and what you should be looking for and all this. I don't know none of that and don't want to know any of it. One thing I do know how to do is copy the 1% because I've been around them enough. I worked with them for 25 years when I was in banking. I know how they operate. All I'm telling you is you have to learn how they operate in good and bad times. They're going to manipulate and use the Fed to their advantage. I already told you, if the Fed increase, they get rich. If the Fed decrease, they get rich. They're going to get rich either way because they're going to stay invested. They're going to stay invested through this whole period. And then guess what they're going to do? They're going to turn around like they did in 24 and take giant profits off the table and wait till the next opportunity to do what? Get rich again. They just keep repeating the cycle. All we got to do is learn that. We have to be invested all the time. 365 days a year, we got to be invested. We just have to be. If we don't, we won't build wealth. We won't build wealth. So if the Fed increases interest rates on March 20th, which I don't believe they will, but if they do, let's just say hypothetically they do, what's going to happen? Stock market is going to fall. And some of you are going to panic. Oh, golly, Richard, I got $5,000 in the stock market and it's red today. What's going on? Nothing's going on. You just stay invested. You're in solid investments. They'll be back. Don't lose your patience. Keep dollar cost averaging. Keep buying them at a discount. In a year or two, you'll thank me. That's what I'm going to tell you. Now, ultimately, you do whatever you want to do. It's your money. It's your wealth. I can't tell you what to do with your money. All I can give you is my opinion when you email me or when you DM me, because people will. All I tell you is stay invested. Are you happy with the investments that you have? Have they shown the ability to multiply money? Do they have a strong historical track record of performance? Yes, they do, Richard. Then don't lose your patience. Keep doubling down, keep doubling down, keep doubling down, keep doubling down, and all of a sudden, it will happen. Just be patient. What we do, though, is we lose our patience. We start seeing this $5,000 we put in, all of a sudden now it's $4,800, $4,500, $3,700. We done lost it then. Oh my God, I'm finna lose it all. And then we mess around, watch something on TV where they say, oh yeah, you're gonna lose it all. You better get it out now. Before you know it, you're down to $3,000. You ain't really lost nothing until you take it out, right? You have an unrealized loss of $2,000. It's not a loss until you take it out. But what do? You go snatch your $3,000 out. You done lost two now because you done took it out. And then you sit on the sideline and say, I knew this wouldn't work. That guy didn't know what he was talking about. I should have never listened to that guy. You lost your patience. A lot of people did that in 2022, guys. They just lost their patience. They allowed outside information into the filter system, probably from the 1% propaganda machine, mainstream media, and they made decisions based on that information, and it cost them. I stayed invested, and I did fine. 2022, all my positions were down. I was probably down like 30%. You're talking about on 75% of my net worth, I was down 30% in 2022. I just stayed patient, kept buying. Stayed patient and kept buying. And now 23, I made a bunch of money. Why? Because I stayed in, plus I kept buying. So my average cost on VGT kept going down because I kept buying the dip. My average cost on the Magnificent Seven kept going down because I bought the dip. My average cost per share on VOO kept going down because I bought the dip. And then all of a sudden that dip turned itself around in 23. First couple months of 23, nothing. First 6 months, okay. First 9 months, oh, okay. And boy, that last 2 months of 23, 9 weeks, one of the best in the history of the market, man. That's why you got to be invested. Because I never know when those 2 months coming. I never know when those 10 days are going to hit, where it's going to go to the moon. So I got to be invested 365 in order not to miss them. So I tell y'all that dollar cost averaging thing is so important so that you don't miss anything. So yes, the information that we get from the Federal Reserve when it has its meetings and they release their meeting minutes and all of that stuff is great. But it's just information that I use in order to do what? Stay invested. That's all. That's all. I just stay invested. If interest rates go up, I stay invested. If interest rates go down, I stay invested. Doesn't matter. I'm going to be invested in paper assets that build wealth, that have a historical track record of multiplying money. That's where you got to be at all time, guys. We know it's an election year. It's an election year. So this thing can go either way, right? One party is going to say, it's never been better. We're at all-time highs. S&P 500 over 5,000. Best financial situation we've been in the last decade. That's what one party's going to say. The other party is going to say, worst economic condition we've been in the last 100 years. Inflation is through the roof. Americans can't even buy the basic things they need to live. We have lost so much wealth because there's incompetence of this other administration. So you don't know what to believe. One party gonna say things are crap. The other party gonna say things are great. So where do you fall in? Who do you listen to? Just stay invested. I don't listen to either one of them. I just stay invested. I don't listen to any of them. I just stay buying my favorite ETFs, my favorite index funds, my favorite individual stocks, 365 days a year. That's all I do. I don't care about what they say or what they do. Doesn't matter. I just stay invested. Why do I do that? Because that's what the 1% does. That's what the 1% does, right? Now, do the 1% pull some of their money out when they take profits? Absolutely. But I do the same thing. I do the same thing as the 1%. I took profits out from 2022. Of course I did. But I'm still invested. I didn't take every dime. I got 75% of my net worth still in the market. So do I take money out? Yes, but I take it out when I believe it's necessary. I don't take it all out. I don't panic and sell because I heard somebody say the stock market is never going to come back. You know that's a lie. How many times have they said that? I mean, I can't even count. And it always comes back. 2 years ago, the S&P 500, 2014, the S&P 500 was trading at about 2,000 points. This was in 2014, guys. 2024, 10 years later, is trading at 5,000 points. I mean, how does that happen? You're talking about a 3,000 point increase. It more than doubled in 10 years. Through all the stuff we've been through, the pandemic, high inflation, and it still more than doubled itself in 10 years. Guys, this stuff right here works, but you got to be invested. right? Now, if you don't want to do it yourself and you're not sure what you're doing, here's the situation, man. You ain't got to be an expert, number one. And number two, if you feel more comfortable going to a financial advisor and having them help you, then do that. All I need to give you the advice from my standpoint is know what you're gonna have your money invested in. If you allow a financial advisor, now I'm not talking about a YouTube financial advisor. I'm not talking about somebody that slide into your Instagram DMs and tell you that they're an advisor. I'm not talking about one of your TikTok financial advisors who on TikTok. No, not them kind of financial advisors. I'm talking about the kind you can walk into your bank, sit down with a real financial advisor at your financial institution. Not none of these social media financial advisors. Not none of those guys or gals. Oh, well, Richard, well, you're a financial advisor. No, I'm not. I'm not a financial advisor. I'm not a CFP. I'm not a financial advisor. I don't have no letters or numbers or any of that stuff after my name. I'm just a self-directed guy. I do my own investing. I'm self-directed. I just know exactly what I'm gonna put my money in and I just put it in there myself. I don't need no help. But some of y'all might need help. My recommendation, go to your bank or your credit union that you bank with and sit down and talk to a financial advisor there. Do not deal with any of these people online. I'm just telling you that right now. Don't. Do not deal with nobody online that say I'm a financial advisor and I want to invest money for you. Don't do it. 9 out of 10 times they're lying. And they're just trying to scam you. Don't do it. Go sit down with somebody. If you want to go use somebody like Merrill Lynch or Charles Schwab or Fidelity or Bank of America, well, go sit down and talk with somebody. But please understand this before you do that. These people eat what they kill, right? In most cases, these people work on 100% commission or they have a small base salary, but most of their income they make is on commission with a small base salary. Some of them are 100% commission. Then some of them are salary plus commission, but the bulk of their income is commission. So you got to understand, just like any other industry, there are some good apples, there are some bad apples. And you just have to ask the right questions. You have to know going in there what you're trying to get accomplished. And then you have to understand that they work for you, not the other way around. They can't make you put your money into something that you don't want to put it into, right? They're going to make you sign something that says these investments are not guaranteed, could lose value. That's just the way they cover themselves just in case they lose all your money. That's all. So know that. Just know that. Don't be afraid of it. Life is about taking chances, guys. Right? Life is about taking chances, but you need to take calculated chances, calculated risks. Don't go out blindly just giving somebody your money because they sound nice on the phone. Don't do it. When you walk in and just say, well, how do you get paid? If I give you my $50,000 to invest, how do you get paid? How do you get paid? Because they got to get paid. They don't just do it for free. They got to get paid some kind of way. So ask them how they get paid and make sure you're comfortable with that payment structure. Well, I get paid through transactions. So every time I make a trade for you, every time I move something around, I get a little piece of something. Then their transaction, they get paid per transaction. If you got enough money, they might say, hey, we're going to charge you 1% a year of whatever we manage for you. So if you give us $500,000 to manage for you, we're going to charge you 1%. So we'll charge you $5,000 to manage this money for you. But you got to ask the question, right? My key and my point here is you got to be invested, guys. Whether you do it on your own, like a guy like me, I do it on my own, or you go hire somebody that's a professional to help you do it. The bottom line is you got to be invested. If you're trying to build wealth, you got to be invested. You can't be on the sideline afraid because you think, oh, what if the Fed increases interest rates. I'm gonna wait till the Fed increases interest rates because that stock market gonna go up then. Don't be waiting on that because you don't know when they're gonna increase or decrease. You don't know. You don't know when they're gonna increase or decrease. We don't know. We're not privy to that insider information. The 1% is, but we're not. So all we can do is just be invested. I don't have the luxury to sit on some finance committee where they're talking about Meta, or they're talking about Apple, or they're talking about NVIDIA, and they already know what type of laws they're gonna put in place to either help them or hurt them. I mean, I don't sit on those committees, but your Congress people do. Some of them do. And they take advantage of it and they get rich. But that's life. Life isn't fair. But you get rich anyways. It ain't fair, but get rich anyways. That's the way I look at it. I know it ain't fair, but I'm gonna get rich anyways. All I'm telling you guys is this. If you want to change something in your financial life, it's up to you. The purpose of me being here and doing these live streams and these videos every single day is to give you the confidence that you need to get out there and build wealth. Give you the confidence to understand, hey, if this guy can do it, I can do it. See, that's how the kind of guy I am. I look at somebody and I'll be like, man, that dude can do it. I know I can do this. I just got to figure it out. I know if this gal can do it, I got to be able to do it. I just need to figure it out. Ain't no secret sauce. It's just being patient, being consistent, being disciplined, being in the market 365 days a year. Don't take no days off. Ain't no holidays off. Ain't no breaks. It's 365 in the market, having my money work for me. Good days, bad days, in between days, it don't matter. The goal is I do that for 10 years. I take $2,000 a month for 10 years at an 8% rate of return. At the end of that 10 years, I got $500,000 in my nest egg. I do that for another 7 years. I get a 10% rate of return. Now I got $1 million in my nest egg in 17 years. In 17 years, I went from 0 to $1 million. Some of you might say, well, I ain't got 17 years. Put more money in. Put $4,000 a month in. You want to get there faster? Hey, sacrifice more. That's all. Sacrifice. Give up something. You don't want to, is 17 years too long for you? Hey, sacrifice something. Give up them honey buns. Give up that grape soda. Give up that Ruth Chris. Give up that BMW. Give up that house that you probably don't need anyways. Give up those trips. Give up getting the nails done. Give up getting the hair done. Give up all these other vices. Give it up. You get there quicker. But everybody ain't willing to pay that price. Everybody ain't willing to pay that price. Everybody is not willing to pay that price. So therefore, many of us struggle. Instead of being up here in this boom economy, we're down here in this bust economy. Because I told you yesterday, you got two economies, guys. You got a boom economy, you got a bust economy. Which economy are you participating in? I don't know. I'm participating in this boom economy. I don't know how many of y'all down here in this bust economy, but I believe we got a lot of y'all in here in this bust economy. Those are the two economies we got, guys. See, y'all think we just got this one economy. No, we don't. We got two. We got one for the rich people and the wealthy people, and then we got one for the people down here who ain't rich and ain't wealthy. We got two. Which one you in, you got to figure that out. I'm up here in this one. Why? Because I paid the price. I'm going to continue to pay the price because I'm going to double my net worth in the next 10 years. I'm staying invested. I don't care what rates do. I don't care what the Fed do. I don't care who in the White House. I don't care about any of that. All I care about is I'm going to stay invested just like these people up here in this boom economy. I'm just going to do what they do. That's it. That's the blueprint. And then get you some really good investments like I got. SPLG, S&P 500 ETF, big boy. FTEC, Information Technology ETF, big boy, heavyweight. And then, of course, y'all already know the Magnificent Seven. Come on, man. Magnificent Seven, out of this world. Led by NVIDIA. Led by NVIDIA. Out of this world, right? So that's the blueprint. The blueprint is be invested 365 days a year, have really, really, really good big boy, blue chip, historically proven to multiply money, paper assets. Keep your patience. Don't lose your patience. Stay in it. Don't lose your patience. Give up something. Give up something. Invest as much as you can invest, and you'll be fine. Like I said, you do $1,000 a month for the next 10 years, 8% rate of return, you got $250,000 in your piggy bank. You do $2,000 a month for 10 years, 8% rate of return, you got $500,000 in your piggy bank, right? You take that $250 and you do it for another 7 years, you got $500,000 in your piggy bank. You take that $500 and you do it for another 7 years, you got $1 million in your piggy bank. Just like that. Patience. And like I said, for those of y'all ain't got no patience and you need it tomorrow, put more money in. Sacrifice more. Put more money in. Put $3,000 a month in, $4,000 a month, $5,000 a month, $10,000 a month. Some of y'all got it. A lot of us don't, but some of y'all do. So if you don't wanna wait 17 years, collapse some time frames, get there in 5 years, but you better be prepared to put more money in and pay more of a price. You're gonna have to give up something if you wanna get there quicker. You're gonna have to give up more than somebody that said, okay, Richard, I'm okay with 17 years. Somebody that says I need to do it in 5, you're gonna give up more than the person that can wait 17. You're gonna give up more. Why? Because you gotta invest more. That's how you get there. There ain't no secret sauce. Oh, how do you do that? Take your hard-earned money, put it in every single month, just like I recommended you do, in the right assets, and you'll be fine. You ain't got to worry about interest rates. You ain't got to worry about inflation. Those things are pretty much out of your control anyways. They're controlled by the 1%. I keep telling y'all that. All that stuff is controlled by the 1%. That's out of your control. The 1% use all that stuff to get rich and to stay rich and to be able to pay for their private jets and their jet-setting vacations around the world, their many homes around the world, their lifestyle. They use all of this stuff here to fund all of that, guys. You and I don't have privy to a lot of this insider information, so we just got to do what they do. I don't know. I'm just telling you what has worked for me over these last 25 years. Like I said, I don't have any formal education in any of these investments. Like I said, I don't have a CFP. I'm not a financial advisor. I don't have any of that. I just follow the 1%. I just copy their plan. That's why I tell y'all, hey, if you want to copy somebody's plan, you're more than welcome to copy mine. My plan has just been copied from the 1%. Credit for that plan. But it works. Or get your own plan. Come up with your own game plan to figure out what you need to do to get to where you want to get to. Only thing I'm gonna recommend you stay away from is allowing the mainstream media to determine how you invest. Because you already know the mainstream media is controlled by the 1% and they have no vested interest in you investing. They want you thinking you own everything, but you own nothing. That's the mentality they want you guys in. They want us in that mentality. They want us as a consumer. See, consumers do nothing but go get liabilities and go get. They don't want us in that. They don't want us there. Why? Because that takes away from their wealth. There's only so much wealth, guys, in this world. There's only so much wealth. right? There's only so much wealth. So the 1% don't want us to give up their wealth. They want to give us the illusion that we're wealthy because we got a bunch of stuff that we got loans on. They want us as a consumer. They want us in this matrix, this artificial world they've created for us up here. They've created a whole nother world over here for us. It's called the matrix. This world of I'm doing well because I have more things than you. I'm doing well because I drive this car or that car. I'm doing well because I live in this community or that community. I'm doing well because my kids go to private school. I'm doing well because I don't have to work. I can just go do Pilates and hot yoga every day. That's the fake world. That's that matrix world. Because see, in that world, you ain't gonna build no wealth. You're gonna think you're building wealth, but you're really building liabilities and debt. Over here in this world, in this real world, where you're building assets that create income, now you free yourself up to be able to go do the things you really want to do because you have assets that generate income. They can't control you. They don't want that. They want to be able to control you. Over here, they can't control you. Over here, they can. And they control you with things. They dangle things in front of you. Ooh, you deserve that Louis bag. Ooh, you deserve this. Ooh, you deserve that. Go ahead and put it on the credit card. You got 0% interest for a year? Run it up. Oh, you got a $20,000 limit? You got 0 interest? Oh, Tom will get a promotion. Janet will get a promotion. You'll be able to pay that off. You're going to get that big bonus at the end of the year. Go ahead and put it on the 0 interest credit card. You'll be fine. Problem is, when that time comes for you to pay that $20K you done spent on that 0 interest credit card, you didn't get the bonus. Matter of fact, you got fired. Or something happened, you just don't have the money. Now all of a sudden that 0% turns into 22% on 20 grand. That's how we roll though. That's how the 1% want you to roll. They don't want you to be over here and say, you know something? Nah, I don't need that 0 interest for $20,000 credit card. I don't need that. I'm gonna just keep what I got. I'm gonna keep investing my money in these assets. I'm gonna build my wealth. I'm gonna get to my pot of gold at the end of the rainbow. And then I will buy what I want when my assets can pay for it. They don't want you thinking like that because why? Number one, you buy all their products and services in order to do what? Make them rich. You buy all their products and services. Everything you buy comes from 1%ers, pretty much, right? Pretty much. Everything we buy comes from the 1%. The 1% control pretty much everything we buy. If I go buy a car, 1% controls that dealership. Definitely 1% controls the manufacturer. If I go buy a house, normally 1% controls all of the material to go into building that house. 1%ers control it. Right? No matter what I do, the 1% controls it. So they want you buying and buying and buying and buying and buying, not saving anything, but just buying and buying and buying. They want you to be in that situation. And you got to understand that and know that if you want to get yourself out of the matrix. So don't worry about the Fed on March 20th. Don't let that bother you. What you do leading up to March 20th is you just keep investing. And think of it this way. If they increase, I'm going to get rich. If they decrease, I'm going to get rich. Why? Because I'm going to keep buying every single month like clockwork. And at some point, all of those investments that I've bought will trade at a premium. Why? Because that's what the stock market says. I don't know. Had you bought the S&P 500 in 2014, look what it did from 2014 to 2024, 10-year block. Increased itself more than double. It almost tripled itself in 10 years. What do you think is going to happen in these next 10 years to the S&P? There's a good chance it could triple itself. Definitely double itself. So if it's trading at 5 today, what do you think it's going to be trading at in 2034? I think it's going to be in that 8 to 10,000 range. I think it's going to be trading between 8 and 10,000 in the next 10 years. And guess what my wealth transfer blueprint calls for? 10 years of grinding in the S&P, in information technology, in the Magnificent Seven. That's why I tell y'all guys I'm gonna double my net worth in the next 10 years. I didn't pull that out of thin air. I look at the history of the market. The market says this is what it's gonna do. That's what the market says. This is what it's gonna do. Market says it's gonna do that. Why? Because it did it over the last 10 years. It more than doubled itself over the last 10 years. So why wouldn't it be able to do that in the next 10 years? It can. Does that mean it will? No. No risk, no reward. No risk, no reward. It's the way I look at it. And I'm willing to take that calculated risk because I'm going off of history. And I'm in big boy investments. Not none of this stuff that just popped up last night or yesterday or last week. I don't put my money in nothing like that. It's all big boy proven blue chip stuff. And I just ride with that. As long as I can get me an 8 to 10% return over these next 10 years on all this money I'm gonna be investing, I'm gonna double my net worth. See, you notice I didn't say 20, 30, 40% return. Nope. More risk. More reward, more risk. More reward, more risk. So for that 40, 30, 40%, I got to take more risk. I'm not willing to do that. I'm willing to take the risk that's commensurate to an 8 to 10% rate of return. That's good enough for me. Bingo. That's good enough for me. If I can get an 8 to 10% return over the next 10 years, double my net worth. Then I'm able to do what? Hang my hat, take my hat off, hang it up on the rack, jump on the plane, go down to the Caribbean, where I'm gonna buy me a nice little piece of land, little patch of sand on the Caribbean Ocean. That's it. That's the lifestyle I'm gonna lead for the rest of my life, right there in the Caribbean, on that water. But I need 10 years to get it done. So you better have a plan, guys. Whatever your plan is, it may not be a patch of land in the Caribbean. Maybe it's something else. I don't know what it is. You got to determine that. Only you know that. As far as I'm concerned, that's my plan. Build my wealth and then enjoy the rest of my life doing whatever I want to do. Now, I do that right now, but I still had a little bit left in the tank. I put 25 years in the bank and I said, you know something, I ain't done. I ain't ready to hang it up yet. So I started this business. I started this YouTube channel, making these videos and doing one-on-ones and all of this other stuff that I do. But see, I control all of that. I control all of my time. I don't have a boss. I don't have a deadline. I don't have a time clock or a time sheet. I don't have an alarm clock. I just wake up when I want to wake up. But see, you don't get to that point in your life, guys, unless you do what? You got to build some wealth. Zero wealth, you don't get that. You have to build some wealth in order to get that. You notice, guys, I didn't say anything about fancy cars. I didn't say anything about fancy this and fancy that. I didn't say anything about that. I gave you all the reasons why I build wealth, if you were listening. Didn't have anything to do with a bunch of stuff. It had everything to do with time, freedom, and choices. That's what it's all about. At the end of the day, do you have enough time? Do you have enough choices? And do you have enough freedom? If the answer is no, get yourself on a plan. Copy my blueprint. That's all you gotta do. Copy my blueprint. Or create your own blueprint. That's up to you. The goal is to do what? Be able to control those three things, man. It ain't got nothing to do with big houses. It ain't got nothing to do with fancy cars, Rolex watches, jet setting around the world. Now, if you build your wealth and that's your thing, go get it. But that's not what it's all about for me. For me, it's about those three things. Controlling my time, controlling my freedom, and controlling my choices. That's what it's about for me. And I gotta double my net worth so I can get more of that. And the way I double my net worth, I gotta be patient, I gotta be consistent, and I gotta be disciplined. I gotta take my money every single month and put it into an investment that multiplies it. That's it. Good times, bad times, don't matter. I gotta be invested 365 days a year. I got to be. I can't take a day off. There are no breaks. There are no days off. Not when it comes to building wealth. You gotta be invested 365 days a year. I don't care if it's $1,000 or $1 million. You gotta be invested. Doesn't matter. $1,000, $1 million. Don't matter, be invested. If all you got is $100, be invested. Every single month though. You gotta invest that every single month. I had an email from a gentleman yesterday. It was either an email or a DM. And he said, Richard, I want to get invested, but I ain't got $50 a month right now. And I said, you know something? The day's your lucky day. You don't need but $5. Now, I'm rocking with Moo. That's my brokerage app, guys, for 2024. But I also still have my Webull brokerage app. I still have my Webull, and I still use it. And Webull has fractional share trading. So I told this gentleman, listen, man, go down there, get your Webull set up, go get your fractional share trading. $5, you can buy your favorite ETFs, your favorite individual stocks. See, I'm about helping people, man. I'm not about, it's people first, money second for me. If you want to be invested and you only got $25 a month, be invested. There ain't no excuses. You can be invested. But here's the goal. Here's what your goal should be. You already know $25 a month is you're going to be chasing freedom for 1,000 years. You can't build much wealth with $25 a month, guys. So here's the goal. The goal is I start with 25, but then I start working on my financial principles, living on less than what I make, living on a plan, staying out of debt, save and invest. I start getting those behaviors right. I start getting those principles right. I take that $25 a month that I'm doing. My goal is within 60 days, I want it to be $50 a month. Another 60 days, right? Every 60 days, I want to double it. So first 60 days, I want to get to 50. Next 60 days, I want to get to 100 a month. Next 60 days, I want to get to 200 a month. Next 60 days, I want to be at 400 and on and on and on. All right, Richard, how do I do that? Make more money. Make more money, reduce your expenses. Boom, you're in the game. You're in the game. Make more money, reduce your expenses. Right? You're in the game. Live on those 4 financial principles, you're in the game. That's how you get in to start doing it, guys. You ain't got to start with $1,000 if you don't have it. Start with what you have. But make a goal to every 60 days, I want to double it. And only way I'm going to be able to double it is I got to make more money. And I got to reduce my expenses. Exactly. Live below your means. Go out and get some side hustles. Do whatever you got to do as long as it's within the law. Get you some side hustles. Don't be too proud to drive Uber. Don't be too proud to drive DoorDash. Don't be too proud to drive Lyft. Don't be too proud to rent you a U-Haul truck on the weekends and offer your services to people who need stuff hauled away from their house. And they're willing to pay you to do it. Don't be too proud, guys. See, a problem with a lot of us is we too proud. We think we better than that. But yet and still we dead broke. I don't know how you can be dead broke and be proud that you be too proud to do a everyday basic job. Maybe that is a blue collar job. Who cares? I don't care if you're a white collar guy, but you got to go do blue collar stuff on side hustles. Who cares? The goal is I need to get to my freedom. I need more choices, more time, right? More choices, more time, and more freedom. See, that's the problem with us. A lot of us, we know what to do, but we think we better than that. Oh, no, I ain't finna do that. I got a PhD. Oh, I got a master's degree. Oh, I got a bachelor's. Oh, no, I've owned my own business for too many years. I ain't going backwards. That's going to keep you broke. That's going to keep you down here in this bust economy instead of allowing you to get up here in this boom economy. Stay down here in this bust economy if you want to. That's where they want you. That's where the 1% want you. They want you right down here in this bust economy where you're living paycheck to paycheck. You got high interest rate credit card debt. You got loans out the wazoo that you can't pay. No retirement savings, no emergency fund. That's where you're at when you're in this bust economy. Now, if you're investing and you're living by the 4 financial principles, you're participating in the boom economy. 2 economies. One economy is booming, the other economy is busting. You decide which one you want to participate in. I choose to participate in the boom economy because I got my act together financially. I'm living on less than what I make. I do have a personal budget that I manage my money better by using a budget. I stay out of consumer debt, no consumer debt at all. And I save and invest. See, I live on those 4 financial principles. I invest every day. 365 days a year, my money is in the market or my money is in an asset growing and multiplying. 4 financial principles, and I gotta be in the market every single day, multiplying my money. And guess what? I gotta do all that over and over and over, month after month, year after year, decade after decade, whatever it takes to get to my pot of gold at the end of the rainbow. That's on you. If you choose to do that, you can. Don't worry about the Fed. Don't worry about interest rates. Don't worry about that stuff. You can't control the Fed. You cannot control interest rates. All you can do is position yourself so that you can benefit off of rates, benefit off of what the Fed does. I can't control what they do, but I can benefit from it. And the way I benefit from it is to buy assets. Buy assets, knowing that the 1% will never let anything happen to the stock market. Why? Because that's where they hold their wealth or they build their wealth. They're not going to let anything happen to the stock market. They haven't for 100 years. Well, all of a sudden in 2024, they're going to just let it crash and never come back. That don't make no damn sense. Come on. They haven't for 100 years. Why would they choose 2024 to let it crash? Oh, the housing market will never come back. It'll come back. It ain't going nowhere. It's still thriving for this boom economy up here. For this bust economy down here, it ain't thriving because you can't afford to buy nothing. But in this boom economy, oh, them people buying real estate left and right, man. They ain't worried about no interest rates. They buying real estate left and right in this boom economy. Why? Because they're financially prepared to do that. But when you're down here in this bust economy, you're not financially prepared to do anything. You're dependent. Independent, dependent. Independent, dependent. It's a difference. You can be independent or you can be dependent. Down here in this bust economy, you are dependent on somebody. In this boom economy up here, I'm independent. I do whatever I want to do. If I want to buy a piece of real estate, I buy it. Why? Because I'm independent. I got assets that generate income. I'm living on the 4 financial principles. I'm in the market every day investing and growing my wealth. Why would I be afraid? I just go buy what I want. My assets pay for it. But when I'm down here as a dependent, looking, oh my goodness, I'm struggling, paycheck to paycheck, this and this, guess what? All that stuff in your control. Nobody told you to go out there and run up credit card debt. Nobody told you to go out there and buy a house you can't afford to pay for. Nobody told you to go out there and buy cars you can't afford to pay for. Ain't nobody told you to go get all these student loans. Nobody. You did all of that. You did all of that. Good news is you can get out of it. But you got to make a commitment to yourself and to your family. You got to find something in your life that means more to you than your fear. You got to put something ahead of your fear. You got to put something ahead of it, or you'll never get out of that bust economy. You better find something that means more to you than your fear. Because fear is keeping you there. It ain't opportunity. It's opportunity everywhere. See, oh, there ain't no opportunity. That's a lie. Plenty of opportunity. What's keeping you in the bust economy right now and dependent is your fear. It's your fear. It is your fear. All I can tell you guys is find something in your life that means more to you than your fear. Maybe it's your family. I don't know. Find something that means more to you than your fear and get yourself out of this bust economy, man. Get yourself to the point where you can get invested and start transitioning from this bust economy to this boom economy. There is a boom economy happening right now, guys. People are making millions and billions of dollars while you're down here in this bust economy. They're in this boom economy, flying around on private jets, living lavish lifestyles, got more time, more choices, and more freedom in their life. You live in the same world. You live in the same country. One person has just decided, I'm going to be up here. The other person says, my fear, I'm scared. I don't want to let this house go. What might my friends think? I don't want to sell all of my stuff. I've worked too hard. But you're living in a bust economy. What good is all that stuff if you don't own any of it? What good is all that stuff if it's keeping you living paycheck to paycheck? What good is all that stuff if you don't have any retirement savings, no emergency fund? What good is it? That's my point. We got to give up all of that crap. If it means I can get up here, if it means I can live in a boom economy, if it means I can own assets that generate income, that can pay for my lifestyle and get more choices, more time, and more freedom in my life, why wouldn't I give up this stuff to get that? Because a lot of us, that's where our identity is. See, our identity is parallel with the things that we own. That's what it is. Our identity is parallel with the things that we own. So all this stuff that we've wrapped around us to make us feel good, that's our identity. That's who we think we are. So change this. Go from bust economy to boom economy. I've given you a blueprint that I follow and what I'm going to do. You decide whatever you want to do, or you can copy my plan. That's okay. I don't have a problem with that. I copied it off somebody. Like I told y'all, I ain't that smart. I'm just a guy that knows how to follow the money. I just follow the money. And the money tells me where I need to go. The money tells me what decisions I need to make. That's all I do. I just follow the 1%. They tell me exactly what to do, right? Well, guys, I appreciate you rocking with me this morning. I'm going to get ready to get on out of here. Hey, lock that thing in with a thumbs up if you don't mind. Lock it in with a thumbs up. Hit that thumbs up button for me if you don't mind, if you appreciate the content, if you appreciate me trying to give you some golden nuggets to kind of move around and adapt yourself around so that you're in a position to build wealth. The key is build wealth. So lock it in with a thumbs up if you don't mind. If you appreciate the content, you know I certainly appreciate y'all, man. You've been rocking with me. I appreciate you rocking with me. We're going to keep growing this channel. We're going to keep reaching more people. We're going to keep helping people get to their financial freedom because that's what we do. So I'm going to be here every day doing these live streams that will eventually turn into a video. I'm also going to be doing some other content every day on the YouTube channel. I'm working on my website. That's almost done. I just working with one of my daughters. She's buttoning that up for me. She's gonna put the website all together for me. And then we're gonna launch the website. I'll let all of you guys know once we launch it. That way we're gonna be able to do some things on the website that I'm not able to do on the YouTube channel. One of those things that I'm gonna be doing is I'm gonna have a members only group of people who I meet with every single week, just us. And we talk about assets. We talk about investing. We talk about how to buy real estate for income, how to cash flow that real estate. We talk about how to get good tenants, how to keep good tenants. We talk about how to use a business to build wealth the right way. We're going to be having like CPAs come on to live chats where you guys can ask them questions. We're going to have other people in the business world that I know come on. I'm talking about experts to help us through how we can build wealth more effectively. So that's going to be coming real soon to my website. Like I said, hopefully that thing will be launching in March. You guys already know I gave you an update a couple weeks ago. Matter of fact, it was just last week. I gave you an update on the Prime Real Estate Fund. I'm still working on that. So those of you who have emailed me and are interested in the Prime Real Estate Fund, we're working on it. Hopefully I can have it formed by May 31st, 2024. It's taken a lot more work than I anticipated, but you know something? I'm a patient guy. We're gonna get it done, and when we get it done, you guys will know. So stay tuned for that. Well, guys, if you want up to 15 free stocks, Moo is going to give you up to 15 free stocks. All you got to do is go down to the description box, open up that Moo account, right? Click on the link, open up the Moo account. If you put $100 in it, when you open it, they're going to give you 5 free stocks. If you put $1,000 in it, when you open it, they're going to give you 15 free stocks. And then you're ready and in position to start doing what? Buy assets, paper assets. And if you want to, you can copy my plan. You can copy the 3 big boy blue chip assets that I'm buying for the next 10 years that I believe gonna double my net worth. Gonna get me to that Caribbean ocean with that little piece of sand on a crystal white beach, crystal blue water, chilling. That's the ultimate goal for me. And then just travel the world. Travel the world. Do my live streams and everything, all different places around the world. Oh, anywhere I want to go, I'm going. And I'm going to bring you guys with me through the live streams, right? So that's the goal for me. What's your goal? What do you want to accomplish? What's on your bucket list? What's on you? I got to do this before I leave this place list. I don't know. You got to figure that out. But here's the thing. Here's the thing. You can have it. You can have it. You can have it. You just got to get the plan together. And then you got to execute the plan. We just talked about that for an hour and a half. Go get it done. Find something in your life that means more to you than your fear. Because that's what's holding a bunch of y'all back, is your fear. You got to find something that's more important to you in your life than your fear. Then you'll overcome fear. You got to find something that's more important than fear in your life. And I promise you, you will overcome it. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. Catch you guys on the next one. Peace.